Because remember that Iran is right next to the Strait of Hormuz, and it's a waterway that carries 20% of the world's oil supply. 20% of the world's oil supply flows through that river right there. And that's including Japan, India, China. Like, these are some major players right here. JP Morgan said this conflict carries more macroeconomic risk than any military event since Russia's invasion of Ukraine in 2022. Essentially, Wall Street has a short memory for geopolitical stocks. If we look at like historically, after the both Gulf Wars, the S&P 500 rose 14 to 16% in the months that followed.
Welcome in everyone to MBA Unplugged. My name is Charles Winfrey III.
And my name is Liam Wong. And today we're going to be talking about some events that have been happening very, very recently. We're going to be talking about the Iran and Israel conflict. Now, just to level set here, the United States and Israel are allies, and that'll give a lot of context as to what's been happening recently. And so, very, very concise way to put it is that Iran had been collecting uranium. The United States and the world had been telling them to stop. And then they kept on going after a deal was made. And they had enough uranium for around 9 nuclear warheads. And so what this means is that Israel said they had enough, and there was a lot of back and forth, and now the United States is involved. So that's where we're at today right now. Charles, let's just open it up and take a different perspective from what's actually been happening and understand that, one, let's look at how is oil impacted? Because remember that Iran is right next to the Strait of Hormuz. Hopefully I'm pronouncing that right. And it's a waterway that carries 20% of the world's oil supply. 20% of the world's oil supply flows through that river right there. And that's including Japan, India, China. Like, these are some major players right here.
Yeah. It's a lot. So, like Liam mentioned, just so everyone can understand, the United States and Israel are allies, and they are at war against Iran. So, near Iran, I don't even have it. I wish you could put a map up. You have Iran, you have the Strait of Hormuz, which is where all the shipping supply goes in, and then you have Saudi Arabia. Everyone knows Saudi Arabia is such a rich country. Why that is because they are one of the largest oil producers, or have the largest oil refineries in the world. Well, Iran has started to bomb some of those oil refineries. And so the largest one has already been shut down just for proactive reasons, in case there are future attacks. Don't want to destroy that large refinery, obviously. But other refineries have been hit in Qatar as well, which is right off the coast of Saudi Arabia. But how this impacts oil and gas. So the oil refinery process is very intensive. It takes like 6 weeks from oil coming out of the ground to refining it to being able to be shipped off to the Americas, where we actually interact with oil and gas. So obviously, from my understanding, this would mean oil prices will go up, or gas prices will go up. Because gas prices goes up, that means oil prices, that means they're both going up, right?
Yeah.
Yeah, right. Supply and demand, sorry. That glitch out. So yeah, I think the first impact that we have, obviously, is at the pump. It is a little bit of a delay. Again, the process is like 6 weeks. And then if there are delays in the Strait of Hormuz, I think that also presents challenges. But I think the most immediate impact of this war at this point is the impact of prices at the pump.
Absolutely. And don't even forget that petroleum is used in a lot of day-to-day products like plastic. That's used for plastic. And so now you're going to see analysts projected like 10 to 30 cent price increase in the following days. I'm not sure if that's already priced in, but what we're seeing right now is that it ripples into everything, like from your groceries to airplane tickets. And it's really, really essential.
Yeah. When you said it's 10 to 30, is that in the gas, or is that in just like everyday?
That's for the oil barrels.
Got it.
Right.
Okay.
So oil is going to be priced at significantly higher, then obviously that affects everything consequent, such as gas as well.
All right. That makes sense.
But I want to talk about this. Why do you think the Wall Street didn't crash, though? Like, you have war happening overseas, United States involvement. Why do you think it didn't crash?
Yeah. I mean, that's a good question. I want to ask you as well to hear your thoughts. I would say the first initial thing is the market is somewhat down today. I think a lot of that has to do with, outside of factors domestically, large of that is because of this geopolitical tension going on. And everything from products being delayed for shipments to input cost of certain products, to Liam's point of petroleum and gas. Petroleum is in so many other products outside of gas. So if inputs costs rise, obviously suppliers are not going to eat those costs. We're going to see those reflected in at the store, at the pump, wherever it may be. So I think why Wall Street didn't crash is because that's a good point. I actually think that's why the market is down today. So Trump recently came out with a statement that he said, the first attack was February 28th. Today's March 3rd. Yeah. Somewhere in between those 2 days, he said he believes the war will last 4 to 5 weeks.
Yep.
Well, now this morning, he specifically stated, I think it may persist longer. And I think that's why the market is down today, because it understands that this may persist longer, where to your point, those delays might persist longer, therefore higher prices for longer. Just a rise in cost of living, which I believe is reflected now in the market because earnings are forward looking. And at the time, this was more temporary, so it didn't shake the market too much. But now seeing it may persist, we're like, okay, maybe this impacts Q2 earnings for 2026.
No, I think you're right there. I think you're definitely right about why the market was down today. I think that's actually a really good point. When we look at some of the data here, so essentially Wall Street has a short memory for geopolitical stocks. If we look at like historically, after both Gulf Wars, the S&P 500 rose 14 to 16% in the months that followed. And so really recently the Dow dropped by around nearly 600 points at open, but recovered by close, right? The S&P 500 and NASDAQ actually ended the day slightly green. And so I think what we're seeing here is that wars typically aren't crashing the stock market by a significant amount. And as a matter of fact, they could be profiting off it.
Yeah. Well, what are you profiting off of them?
I think that when we look at the best time to invest, it's when everybody's scared, right?
Okay.
And so right now we're seeing a lot of defense stocks. I'm not even sure if it's priced in yet, but we're seeing a lot of defense stocks. We're seeing a lot of things that are involved with geopolitical things just rising, right?
Yeah.
And I mean, the S&P for NASDAQ ended the day green. Yeah. That's kind of crazy.
Yeah. So you're saying more from an aspect of personal investors are going to profit from this, or more corporations?
That's a good question. I'd say the personal investors who are knowledgeable about the things that they should be investing in are going to profit off of it. And that sounds pretty basic to say, but investing takes a lot of financial discipline and mental discipline to be able to know and not be scared of your thesis behind things.
Yeah.
And then for the companies themselves, I mean, of course they're going to be profiting. I mean, this is their gold mine.
Yeah. And I think it's unfortunate because there have been a lot of casualties in this, especially in Iran. I think the total now is pushing 700. I know 8 U.S. soldiers unfortunately lost their lives. So it's like, I say all that to say it's like not all profit's a good profit. Yeah. In a way, especially for these oil companies the most, because they're capitalizing off these higher costs. So I think it's very interesting there. But I think my biggest takeaway from this is to see, obviously, the unfortunate nature of the geopolitical tensions. U.S. is now involved with Israel through an allied partnership, and then the war with Iran. But I think it would be interesting to see if other nations surrounding the area, specifically the Middle East, get involved, because if in the event that they do, I feel like you're reaching a whole nother landscape now of companies that would be affected, everyday life that would be affected because of that. And to Trump's statement this morning that this war may persist longer than 4 to 5 weeks, I think that all insinuates that there's a potential of that happening. So it'll be interesting to see how that plays out going forward.
Absolutely. And I want to bring up this text I had from my mother because she lives in Dubai. And so she had received a notification from the Ministry of Defense, and this ties into exactly what's been happening. So this was on, I believe, February 28 or 29. Okay. It was recently. It was Saturday, so whenever that was.
Yeah.
And basically they had said that the UAE had intercepted hundreds of missiles and drones amid attacks by Iran, which were brought down by air defenses. So 137 Iranian ballistic missiles were detected and launched toward them, with 132 of them destroyed while 5 fell into the sea. With 209 Iranian drones were detected, 195 of which were intercepted, and 14 fell within the country's territories and waters, causing some collateral damage. So then it comes into the question of, when does it stop becoming just about defense and defending your citizens and start playing on the other side of the chessboard,
Yeah.
right? Because it's almost offensive. Like you can't bomb another nation and expect them not to retaliate, right?
Right. Yeah. And I think that's why I think it's very interesting. Because if, again, context, Israel, United States are allies. Iran is on the Strait of Hormuz is this body of water where a lot of shipments go through. Iran is on one side of it. UAE, United Arab Emirates, is on the other side of it. They weren't even in this conflict to start. It was just Israel who's up here and then Iran. So to your point, I mean, that's a primary source right there reporting like what's happening on the ground. I really am interested to see how it will play out because back home, all very unfortunate what's going on there. But in terms of how we relate into the impact on our daily lives, gas prices at the pump continue to, I think national average around $3. Forget that. I mean, like you said, 10 to 30 cents increase in gas prices. And then just everyday living, which is definitely going to continue to rise as well.
Yeah, and then we can also look at the worst case scenario and what happens here, right? So let's say the worst case scenario for the markets, it's that the Strait of Hormuz closes long term or even just for a brief amount of time. And it's that one energy analyst put it pretty briefly that a prolonged closure of the Strait of Hormuz is a guaranteed global recession. That's their opinion on this.
Ooh.
And so about a third of all seaborne oil and 20% of global oil passes through that waterway. Literally China, India, Japan, South Korea, the countries I mentioned before. If it stays blocked for weeks, oil could blow past $100 a barrel, right?
And
let's see.
Where is it now?
Let's see where's that right now.
Just for context, when you said 100, guaranteed recession is heavy words. I wonder.
Yeah, right now it's sitting around 80, I think.
Oh wow.
Yeah. So
that's a 25% increase.
That's insane.
Yeah.
And when you look at this, JP Morgan said this conflict carries more macroeconomic risk than any military event since Russia's invasion of Ukraine in 2022. So right now we're seeing things like you just said. If the Strait of Hormuz closes long term, you're going to see massive flow through to day-to-day people, absolutely crazy.
And a lot of corporations, a lot of businesses. I mean, it's funny. We just talked about a video on AI and kind of the market is almost reassessing the valuations given to these high growth companies. Well, if AI is getting a repricing, we're seeing trouble geopolitically. I mean, who knows what the outlook of the market could be? And I think this also ties into another point in terms of interest rates and how that's affecting domestically. So right now, the Fed, the Fed's rate is between 3.5, 3.75. And for the next two meetings, it's a 95% chance for this upcoming meeting and then around like a 75% chance that there will be no rate cut. And I think while we see that is in addition to so many factors, but this also adds on to that and almost confirms rates staying firm where they are. Because if we see a delay in a lot of these area shipments, whatever it may be, costs will rise up as well, which therefore insinuates inflation will continue to rise. So I think rates have to stay higher for longer to kind of cool off that inflation. But who knows? Like if that continues, we might not be seeing. I think now we're predicting maybe a 1 or 2 interest rate cuts for the rest of the year. But if this persists as well, that number could fall even more.
Yeah, and I want to really talk about this because we're seeing this. Let's talk about who wins in this environment now. So you have, like you just said, you have the companies, so defense contractors like Lockheed Martin, Northrop Grumman, and then you also have oil majors, like you said again, prices are raising higher. So Exxon, Chevron, and then you also have gold, which is rallying. So gold was down today, but over time, it's been up because gold is often seen as, to put it very simply, hard asset, right? And when investors are scared, they like to put their money into something considered safe. Right. And I think right now what we're seeing is a lot of these airlines, shipping companies, consumer spending stocks, they're very, very, very vulnerable right now. Transportation literally runs the world. It does.
I mean, anytime oil increases, Delta is going to be down. Any airline stock's going to be down as well. But I think you also open up another point in terms of like hard assets. You talked about it. Like, I think you said JPM's prediction of gold next year was like I just read something. It was like $8,000 for futures, gold futures.
Yeah.
And it's currently at like, I think it's around 6,000, something around there.
They said their target is spiked around 5,400 on Monday. JP Morgan's target is 6,300.
6,300, excuse me.
That's still a massive increase.
Absolutely. Still 15+% a year for asset considered safe as well. So I think, again, it'll be interesting to see how this all plays out. I'm a Bitcoin guy. Bitcoin's been up this week after crazy. That's a conversation for another day. But yeah, it's a lot going on in the world right now. Between AI, geopolitical tensions, not to mention we still have tariffs. I mean, Supreme Court technically shut it down. Trump re-engaged a 50% tariff when the Supreme Court struck on his 10% tariff. So I think it's a lot going on. But again, the goal here with this video is kind of just level set what was going on with U.S.-Israel and the war with Iran and how that affects our daily lives.
Absolutely. I think this is really beneficial. I hope you guys are able to take something away in terms of not only the conflict that's happening right now, but how this affects the market and what that flows through is going to mean for you. And if you begin to see price changes in your day-to-day, you're going to know why. This could be the reason why.
Absolutely. Well, we hope you all enjoyed it. As Liam said, like the video if you enjoyed, share it with somebody else if they need to receive this information. And with that being said, we'll see you on the next one. Peace.